Hi guys, this is Crowd Investing. In today's stock analysis, we're going to see the Home Depot. Okay, so this is their White House in United States. Okay, so this is the reason that why I choose Home Depot, because in the last 10 years, Home Depot is all the way in the uptrends. Only those like major event they will go down. So normally it's on the uptrend, so it's a very good stock to put in your portfolio. Disclaimer. Okay, first of all, we have to understand what is the business model of Home Depot. Home Depot is actually founded in 1978 in United States, and then it's a home improvement retailer. Then it actually have the store that are selling the various building product. They have the home improvement product, building materials, lawn and garden product, and then they also provide the service as the installation, home maintenance and professional service program to your company or to your home. And then they also offer the installation program that include the flooring, cabinet and cabinet makeover, and then countertop, furnace and central air system and the window. Then they also provide the tool and equipment rental service. Sometimes those building, the risk company, they had to maintain their building, then they need the equipment, then they can rent from the Home Depot. And then in January 2021, right, Home Depot actually operate about 2,296 retail stores in the United States. Okay, so this is the categories of their product. Basically, their product is including everything regarding to the home improvement. And they have the applicants, bed, and then they have the window, building materials, furniture, door and window, electrical, flooring, hardware, heating, cooling, kitchen, tool, basically including everything. So this is their revenue from 2018 to 2020 by each of the different segments. You can see that it's actually improving, and then during the 2020, the pandemic, the COVID-19, right, the Home Depot is actually not affected so much. You can compare the 2020 and the 2019, the revenue. You can see that some of the sector is even actually increasing the revenue. I think this is because more people, they are starting to work from home, and then they are also buying more and more materials at the office table or office chair in their home. And then they're also doing some of the house improvement, maintenance or constructions. So Home Depot is actually slightly benefit from this pandemic. And then this is a revenue breakdown by the segment. You can see that from this chart, right, the Home Depot, the revenue is actually quite diversified, and then also quite balance of each of the sector. Means that even if one sector have the issue, it won't affect the overall of their business revenue, because the segment is quite diversified and then quite balanced. Okay, then Home Depot is actually mainly in United States, Canada. So there is a you can see that from this chart, right, there is about 95% of their revenue is actually from the United States, and then there is only a little bit are from the outside the United States. And then you can see that the net sales, right, you can see that the United States is increasing in the last 3 years, but you can see that outside the United States is also increasing. Means that Home Depot is actually starting to focus on the overseas business to grow their revenue and then their company. And then one thing that in my concern is that they are actually net sales of the products is increasing, but the net sales in the services is actually reducing in the last 3 years. So it means that they are actually selling more product, but their service is not that increasing. So this might be the part that the Home Depot had to look into this. Also, for as an investor, you had to take note of this as one of the risks to invest in this company. So one of the good thing is that since 2017, 2019, and 2021, Home Depot, the directors and the company, actually they are keep doing the share buyback. During the December 2007, they announced that there is 12.5 billion share buyback in the next 3 years. Then in February 19, they have 15 billion share buyback, and just recently last month they announced 20 billion share buyback. So the only reason that the company will going to do the share buyback is because they think that their company share is undervalued, and then they want to buy back of from their own company share. This is the only reason, means that their director think the company is good, undervalued, that is why they buy back. Okay, this is the net sales in $1 million. You can see that in the last 3 years the net sales is also increasing, means that it's really fantastic, and that I would say that it's also consistently. So after looking at the business model and then about the Home Depot, so we look at the financial. In the financial review, right, in the total revenue since 2017 is all the way increasing, is okay. Net income also increasing consistently. Cash flow from operation is also consistently, I would say, is very good. Just that 2021, right, is a result of 2020, so it's a bit high due to the pandemic. Like what I said just now, the people are purchased more and more office table and office chair at home for them to work from home. So I would say that this is the one type jump. I will maybe you have to cannot take this as a discount that how to say, cannot take this as the every time will be like that. So if you look at the previous few years, it's consistent, so it's more, it's very stable. So it's for, as an investor, we need a stable and we need a consistent growth also. So in the debt review, right, the Home Depot, the current ratio is 1.1, debt to EBITDA is 1.79, debt servicing ratio 7.2, fantastic. Debt to equity is 24, is a bit too high. Interest coverage ratio is about 15 times, so it's really fantastic. Means that from here we can know Home Depot does not have the issue if they want to pay off all their debt at once. So for the future growth rate, right, from the Finway's chart, simply watch Yahoo Finance with Guru Focus. In the last, the future is about 9.14% average, so it's also considered very good. During the historical growth rate is about 53, which is really, I think this is the sum. Okay, so the average is also about maybe 16 to 19, so it's also very good. So 9% for the future growth rate is actually a very conservative growth rate to expect for the future for this company. So by using the stock value calculator, right, the final intrinsic value I get is about $308. So by looking at others sources like Morningstar, Simply Wall Street, their intrinsic value is actually quite similar to mine also. So by the time that I doing the slide, the current stock price is $309, so it's about, we say it's about a fair value right now, the Home Depot. So it's not super undervalued, not super overvalued, it's in a fair value. As an investor you can buy it, but please don't all in. So this is 3 of the buy point that I have. So you can see that this around here fair value, it may be by 30%. If drop into the 50 MA, you can buy another 30%. If continue drop into the this one, the brown line is 100 MA, then you can buy your last 40%. So buy in the stages so that you can have to average down your stock price. You can see the 50 MA is actually quite a strong support previously. Yeah, there's a 1 2 3 4 5. Yeah, this is the pandemic that the COVID-19, the price dropped down. It's very rare that they will drop so much. It's only those special event. If not, 50 MA is a very good support. Okay, so this is all for today. If you like our video, you can subscribe. Thank you very much. Bye bye.